Good afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'll get you updated on what's happening around the business world. Payroll report is out from ADP. That would be the private one. Of course, government ones aren't coming out at all through this government shutdown. Big news, though, happening this morning. The Supreme Court is hearing the tariff case on whether tariffs are legal or not. We don't know when they'll rule, but we kind of know the questions that were being asked there by the Supreme Court justices. So we'll talk a little bit about that coming up as well. And before any of that happens, though, let's get right into that Market Watch. So the Supreme Court is showing a little bit of doubt. We'll talk about that in just a minute on whether the Trump tariffs are legal, at least in the way that he's putting it out there. This morning that's happened. But bigger thing here on the market is the AI companies. Well, they're recovering here today, and that's why we don't have a sell-off again today. Dow Jones is up to 227 points right now to 47,395. The S&P 500 is up 47 points to 6825. The NASDAQ up 242 points right now to 23,591. Then that small cap index, right, the Russell 2K, it's up 40 points to 2468. And then Bitcoin recovering a little bit today, 103,772, of course, went down underneath 100,000 yesterday for a little bit. First time since June that had happened. Nice rebound today for it as well, 103,796 for the cryptocurrency Bitcoin here today. Stocks we're paying attention to right now with everything happening in this market. First one, local company out of Scottsdale. We've talked a lot about them because of their headquarters they want to build. Well, Axon Enterprise is the first stock we're going to look at, and they are down 9.61% today. You know them if you follow this show, Taser manufacturer. Want to build that big headquarters in Scottsdale, kind of being fought over there with those apartments they want to build with it as well. This was down a lot bigger today. This was down 18 to 20% earlier today. Has slowly climbed back up, only down to 9.61% right now as well. But Axon missed their earnings numbers large. It wasn't even close out there. They did blame tariffs for the situation, but Axon earned $1.17 per share in their third quarter. Expectations were a profit of $1.52 per share. That's a high 30-cent range miss here by Axon in their quarterly reporting. They blame the tariffs on the reason why, but their stock, of course, down today big based off of that news. And then Kava is the next one. If you've eaten there, congratulations. I have not eaten at a Kava yet, but they're a fast casual restaurant. They're down. They were down earlier today, as you see on the graph in front of you, 8% down. Well, they're up 1.03% right now as well. They revised its full-year guidance for same-store sales. What they say now is same-store sales will be between 3 and 4% sales growth. Well, before their prior outlook was 4 to 6% for same-store sales. So down for those same stores, at least they're announcing that here. Now, they also lowered the restaurant-level profit margins to a range of 24.4% to 24.8%. Before, they had the individual restaurant-level profit margins at 24.8 to 25.2% is what they had it before. So revising the numbers down, that's why they started the day down about 8%. Kind of coming back here, 1.12% for Kava Group here as the day has gone on. And then finally, this segment, we'll look at Pinterest out there. You know them, the social media company, and what they do. Yeah, look at this, 21.03% down here today as well. Weaker than expected earnings for them as well. Pinterest made a profit of 38 cents per share. The expectation was 42 cents per share, and they blame the advertising issues that they're having right now. They blamed it on tariffs also. For Pinterest out there. So 21.12% down with their miss here today for that social media company. Later on, when we come back and look at stocks, we're going to look at an auto repair company called Monroe. MONRO is what it's called out there. Big movement here by a big-time name here in the investment industry. We'll talk about that. Super Microcomputer, one of those AI stocks that we saw drop yesterday. We'll take a look at them here today as well. And then we'll check in with McDonald's as they did their reporting as well yesterday for McDonald's. And interesting results from them, not necessarily in terms of the numbers, but what the CEO said in terms of what McDonald's outlook is coming up in the future. No graph on this. This is just breaking here right before we went to Showtime. But payroll growth at private companies, this is that ADP report. Well, it did turn slightly stronger than anyone expected in the month of October. So what that means is there's some hope now on that the labor market isn't in danger of sinking, which has been the fear here for the last couple months in terms of the numbers, This report did come out earlier today here from ADP, and we got our hands into some of the details here right before showtime. If you want to look at those individual details, companies added 42,000 jobs for the month of October. That followed a decline of 29,000 in September, and it did beat the estimate number expected of a gain of 22,000. So the revision for September did show 3,000 fewer jobs were lost with this revision. So ADP is the private side. The Bureau of Labor Statistics does the public one, the government one. We're not getting that anytime soon with the government shutdown. So specific industries where there's gains, well, 47,000 gain in the trade, transportation, and utilities area. Well, that obviously is a big number. It helped offset losses in multiple other categories in terms of job cuts. Education and health services, they had a growth, 26,000 for them. Financial activities, well, that actually getting about 11,000 jobs in the month of October. So, this is interesting, right? Artificial intelligence is kind of leading this big tech boom that's been happening as well. Well, if you look specifically at trades categories in that area, like information services, for instance, there's actually a decline of 17,000 positions in that AI sector there. So other ones that had losses, professional and business services, had about a 15,000 loss. Other services, which is just a broad category for things that don't fall into this, was a 13,000 loss. And interesting enough, manufacturing, right? That sector continues to struggle. There's a 3,000 job loss in that area. And that's surprising because President Trump is trying to bring back the manufacturing here to the United States with these tariffs, things that are in front of the Supreme Court here today as well. So the job creation, ironically enough, came from companies employing at least 250 workers. Big companies are driving these numbers now. That category just by itself added 76,000 jobs to those big companies. Smaller businesses actually lost 34,000 jobs in that same time frame. This is a trend away from job growth at small businesses, and it is a very significant number that's happening, right? Small businesses are actually responsible for 3 of every 4 jobs out in that marketplace, and there's a big 34,000 job reduction for small businesses here. Despite the meager job growth, salaries, well, they continue to rise, amazingly enough. Year-over-year pay for those staying in their jobs, I should say, they rose 4.5%. That's the same as in September as well. If you job switched, you saw an increase of 6.7%, which was up a little bit higher than in September if you were switching jobs at that point. So ADP numbers are out there and kind of a mixed bag. Surprising numbers on the positive side, giving some hope to this economy, as there was some bleak stuff there in September in terms of what the economy was doing. And one of the reasons why we got a rate cut here by the Fed, something to keep an eye on here as they meet again coming up here in December. And then, as I told you earlier, the Supreme Court justices did meet this morning and had their hearing there on these tariffs, specifically the emergency tariffs out there as well. And we got some interesting results. A lot of people read the body language, read the questions coming out of the justices when they're being talked to about the arguments on both sides of this. Well, the justices expressed skepticism, both on the Republican and liberal side of the justices. Both of sides expressed skepticism about the legality and the progressive tariffs imposed by President Trump here at the beginning of the year since April. Conservative and liberal justices sharply questioned the Solicitor General. His name's John Sawyer. He was the one arguing for the tariffs there on the Trump administration. But they questioned him on the Trump administration's method for enacting the tariffs. Obviously, the critics are saying it infringes on the power of Congress to add taxes, as that is their responsibilities. As we all know, lower courts have ruled that Trump lacked his legal authority, and these are the tariffs specifically under that International Emergency and Economic Powers Act. It doesn't include the ones for steel, for instance, or aluminum. That's a separate power that he is doing those tariffs under at that point. So these are those specific ones. Brazil tariffs, China tariffs would fall underneath these levels here now as well. So a lot of skepticism, at least in terms of the questioning, right? Justice Sotomayor, she's one of the three liberal members on the court there. She told Sawyer, quote, "You say tariffs are not taxes, but that's exactly what they are. They're generating money from American citizens, bringing in revenue," is what Sotomayor said in her questions as well. She later noted that no president other than Trump has ever used the IEEPA to impose tariffs at that point. Then you can go to the Republican side, right? The conservative side of the court, Justice Neil Gorsuch, as well. 6 conservatives on the court, 3 liberals. And the conservative ones asked a lot of these same types of questions. He pressed Sawyer on the fact that Trump had unilaterally imposed the tariffs. He cited the international emergencies of trade imbalances. The flow of fentanyl is what President Trump had cited as well. But Neil Gorsuch did question about why Congress did not authorize these taxes, and it was unilaterally done by the president. Here was his quote on his question, or his side of asking things. He said, quote, "What happens when the president simply vetoes legislation to take these powers back?" He said, "So Congress, as a practical matter, can't get this power back once it's handed it over to the president. It's a one-way ratchet toward the gradual but continual creation of power in the executive branch and taken away from the people's elected representatives," is what the conservative justice kind of talked about from that perspective. Congress always gives up power to the presidents. I don't know why they do it, but they do. Treasury Secretary Scott Bessent, he was planning to be there at the opening arguments here today, but this is what's on the line. He said in a court filing in September, the U.S. would have to refund $750 billion, actually more than that. That's what he said in September, if the Supreme Court ruled that tariffs are illegal, and they waited any much longer here to decide on this ruling coming up here. So some skepticism from liberal and conservative justices that these are a legal tactic. The president can do tariffs. It's just, is this the right method for the president to do it under this emergency act? It's kind of the question that they are answering. As I said, this isn't the steel and aluminum tariffs that he's imposed. These are the unilateral ones against China, India, Brazil. Those ones there under that emergency act are kind of what are being questioned now. And if they rule that that act is illegal and using that act, they're just going to use another act to move forward to and fight that in court as well coming up. I predict. I'm just guessing here at that point. We know the government shutdown continues here. Now the longest shutdown of all time. No end in sight in this government shutdown either. And those of you that do get your insurance on the Affordable Care Act, you've seen all the stories, and we've talked about it here on the show about the price increases you're seeing there. If you're doing private insurance through your company, you're seeing the price increases on that as well, right? So the ACA, the marketplace is open on November 1st. So we're seeing some true numbers here with people checking the rates and what's out there on this marketplace. So the average premium for a mid-level insurance plan, that would be the silver plan, it's up 26% this year. And it's at $625 per month is the new number out there. Yeah, KFF is a nonprofit health research company, and they kind of did this digging and findings for us out there. That 26% increase, that's the biggest increase in ACA plan rates since 2018. And obviously a lot of people are shocked on this price increase as they're going in there looking for health insurance coverage for next year. That doesn't include higher cost sharing for families. For instance, that's your monthly premium amount, 26% up. But what they're doing as well is they're making larger out of pocket maximums for people. They're raising deductible amounts for people as well. So you're paying the higher monthly premium rates, and then you're also paying those higher numbers as the year goes on in terms of health insurance. So the numbers on the ACA, why is this a big deal? Your private insurance has gone up as well. Well, 24 million Americans get their health insurance through an ACA plan. And then 22 million of that 24 million, they currently rely on the premium tax credits that they get. That's why you're seeing the bigger amounts, 130% increases out there. Is because the people that were getting the rebates there from the government, the tax credits, those tax credits aren't in place right now. They expire at the end of December. And that is leading to those 100+% numbers that you are seeing out there as well, doubling those numbers there, according to KFF, without those premiums. So these these are the numbers that insurers are charging, right? That 26% premium hike is what insurers are charging consumers buying their plans, just like your work one. Your price increase is what your work is being charged by the insurance companies for an increase as well. So, to me, I get it. There's expenses involved, but the healthcare industry is what's driving this up. It's just no different than insurance. State Farm is just raising prices to get more profits out there. And my conspiracy theory mind out there as well. So the credits expire in December. That's what the Democrats are claiming. Why the Republicans won't negotiate with them on it unless the government's open. That's why they're fighting so hard, and the government's still shut down. They claim. But we're seeing raw numbers now, 26% increase for that out there as well. And let's move to some company stuff here and get away from the government side of things. And remember U.S. Steel? Yeah, it was bought by Nippon Steel earlier this summer. A lot of deals involved, and the United States Steel's coming through with some of those things that were said during this process of Nippon Steel purchasing them. Well, United States Steel came out yesterday and they detailed its billion-dollar multi-year growth plan with, of course, Nippon Steel as their new owner. So what they're going to do is modernize their century-old company and make them more nimble on their feet, we should say, here moving forward. So 5 months ago is when Nippon Steel finalized that partnership with U.S. Steel. And U.S. Steel's out of Pittsburgh area, Pennsylvania. Remember, Nippon Steel finalized that deal. It was worth about $15 billion, the transaction was. And that deal was negotiated by President Trump there and included a golden share provision. And it gives the United States federal government the power to appoint a board member and have a say in some of these company decisions. So it's not just a Japanese company running an American steel company. The combined company did become the world's fourth largest steelmaker when combined. And back then, when a deal happened, Nippon did agree to invest $11 billion to upgrade U.S. Steel's facilities. Well, that announcement was what they did yesterday, right? Tuesday. And now these investments will be done by the end of 2028, was that announcement. The plan targets unlocking $2.5 billion in savings from capital investments and even another $500 million from operational efficiencies that U.S. Steel is going to undertake as well. U.S. Steel says it has identified more than 200 initiatives to save money across their whole company, all their business segments. 50, they got some help there by 50 professionals from Nippon Steel coming in and looking at everything to make these changes and save some money. U.S. Steel is modernizing. It's expanding its manufacturing operations. They're expanding research and development because they want to feature higher value, lower emission steel moving forward as well. This whole plan that they announced on Tuesday is designed to protect and create more than 100,000 jobs nationwide inside the United States is what they're looking at doing. There's no specifics on those jobs, but that's their goal and aim here with all of these changes coming up. So we're seeing the initial stuff there of all the promises from Nippon Steel and purchasing U.S. Steel out there. We're seeing that hit up here. And look, it's almost lunchtime, and I know there's a few of these restaurants still around in the valley, but it's been in a lot of turmoil a lot lately. And there's a company out there, an LLC called Original Hooters. Yes, that company is run by the original founders the founders themselves and the original investors behind the very first Hooters restaurant. Well, they've now acquired Hooters of America, which is the company that filed for bankruptcy and everything. They're buying a lot of those restaurants along with a couple other franchisees out there. And they bought it during the bankruptcy restructuring earlier this year. So now the original Hooters company, the original founders and investors, well, they plan to return the chain to its roots as a local beach-themed hangout. All server uniforms will return to the brand's original beachy vibe and heritage. Some locations will incorporate, well, palm tree inspired decor to highlight the beachy theme that they want to get back to. The iconic orange shorts, well, they've gradually become shorter over the years. Well, they will revert to their classic 1980s athletic style moving forward. And so, with this shift here that they want to put it back to the original restaurant, not what it's changed into, well, Original Hooters has also confirmed that it will discontinue its weekly bikini nights as they're going back to the original theme. During the bankruptcy restructuring, Original Hooters, alongside a group of experienced current franchise owners, they agreed to buy and run some of the restaurants that Hooters of America currently owns. Original Hooters, along with their partners from the Hoot Owl Restaurants LLC, that's the franchisee, well, they operate now 140 of the 198 domestic locations across the U.S., and all of them will move away from the sexual branding and get back to that 1980s original Hooters style that they had out there. And the other ones are owned by franchisees out there. Like I know the ones here, there's a couple here. I know one of them over here in the East Valley is a franchised owned one. Wasn't going anywhere. They operate as they want to. But for those of you that like the Hooters wings and whatever else Hooters, they used to have a really good grilled cheese. Got rid of that at one point in time. Disappointing. And then just as a follow-up here, we know there's a penny shortage out there. We're seeing companies announce constantly how they're rebounding. Nobody's stopped cash payments, if they were authorizing it before. But McDonald's now is among many businesses dealing with the penny shortage. And how are they handling it? Well, some of the fast food restaurants are now rounding cash purchases. Some of them are doing it up, some are doing down at McDonald's, is what Fox 10's reported there. I can tell you this: I was at McDonald's yesterday, paid cash, got 2 pennies back from them as well. So at least the one out by my house, one of those, isn't doing anything different with their cash side as well. So they're rounding it to the nearest 5 cents when customers don't have exact change of shopping there at McDonald's. Because the U.S. Mint, of course, stopped making pennies about 2 months ago, and big shortage out there as well. So McDonald's now announcing what is happening with that cash side of things as well. So and obviously that's just cash purchases. Nothing gets rounded or changed going forward. And just these restaurants have to do the simplest thing ever. Add the tax into it. Take it to that, and if it's, let's say it's $9.54, you go to $9.55. If it's $9.51, you go to $9.50. $9.52, you go to $9.50. Even if it's $9.54, go to $9.50. Lose 4 cents. It's not going to kill you to make for customers' lives easy. I just don't get why we fight so hard for people to pay cash these days. Hey, folks, when we come on back, well, we'll keep McCollum on Business going. Some local stories coming your way. Stocks that we're paying attention to coming up. We're going to actually look at McDonald's stock. We're going to look at super microcomputers and a company called Monroe. They're a auto service chain is what they do, but a big investor is getting involved with them in that industry. Something to pay attention to when a billionaire gets involved in that. So come on back. It's McCollum on Business. And you just saw the ad there for the Real Matrix. Today is Wednesday, and noon is right around the corner. We'll have the new Real Matrix episode up for this week. Every Wednesday at noon is when you can find the new episode of the Real Matrix. We have 6 of them up now. 7th one going up today. The Angry Patriot gets you informed on what's happening on the government side and what they're doing here, right, to us, the citizens out there. That's your type of program. Catch it here on demand, of course, at Robat TV. It'll be posted here at noon o'clock. Also on the YouTube page here for our produced shows here that we do. Also on that YouTube page, just search The Real Matrix. It'll come right up for you. And then, of course, they do have a podcast version of the show as well. Find that for The Real Matrix. All of the same thing for the main event. Me and 17-year NFL veteran had a fun day today talking about coaches, and everything's fine, folks. You have to watch the show to catch on what I'm talking about there. But on demand right now, Robat TV, the free YouTube page as well, free podcast system, all posted there for you. As soon as we're done here at 11 o'clock, well, we move right into posting this show on the YouTube page, Robat TV as well. And then the pit stop. We were putting together, the NASCAR had their awards last night. We're putting together the final show here of the season. We'll be out this week as well for the pit stop before it goes on hiatus until February. At the Pit Stop Talk is where you can find the podcast version of it, as well as also on that free YouTube page. On demand here at Robat TV, it's just been a fun year of NASCAR talk out there, and looking forward to the next season. And folks, let's get right back into it with the Market Watch. And I'm looking at a lot of breaking news here that's hitting the table, but obviously everything is in buying mode today. The AI trade is recovered. We'll talk about super microcomputers, one of those stocks. Coming up as well, the Supreme Court showing doubt on Trump tariffs. Investors are watching that because obviously less tariffs will mean less, prices will come down for people in theory. So investors are watching that as well. Warner Brothers Discovery is just coming across the wire now that they've kind of put Paramount into a system here as Paramount was trying to buy Warner Brothers Discovery, right? Warner Brothers Discovery says they're going to target Christmas, and that'll be the deadline there for announcing a sale or a split of the company. Paramount wants to do it now. They don't want to wait. I'll have to see what Paramount does here with that news, if they wait or if obviously Warner Brothers Discovery is doing that to kind of up the bids there with Netflix. I saw was trying to buy them and a couple other places as well. But Dow Jones is up right now 210 points. S&P 500 is up to 46. NASDAQ's up 242 points. The Russell 2K is up 38 points right now. Bitcoin keep going up today as well. Hit under 100,000 briefly yesterday, but it still went under 100,000 for the first time since June. Well, today back up to the 104,102 for Bitcoin here today. Stocks we're paying attention to. Well, let's talk about that Monroe company. That's that auto service chain, up 17.81% today. Now, I don't know this company at all, anything to that effect. But anytime a billionaire investor, especially one that's had success in the automotive industry, running Chrysler, for instance, we're talking about Carl Icahn. He took a big stake in Monroe earlier today, or he announced it earlier today. He's the largest single shareholder as well, and he's making moves in the automotive sector, Carl Icahn is, and people are noticing that. So Monroe up 17.81%. Incidentally enough, he disclosed ownership of 4,439,914 shares. That's a 14.8% stake in the company as well. Well, the filing shows his shares were acquired by Icahn's investment entities specifically. No idea what his plans are, but he takes over as the biggest single shareholder over BlackRock, who was at that number before. So he's making moves in the automotive industry, which, of course, he rebuilt Chrysler back in the day. So people are noticing what he is doing. Next up, Super Microcomputer is what we're going to look at, down 9.29% today. They posted fiscal first quarter results. Well, They obviously missed expectations if the stock's down 9% here today as well. They earned 35 cents per share. Well, the expectation was 40 cents per share. Revenue was only $5.02 billion for Supermicro computer. Well, revenue was expected to be at $6 billion. So some big misses here by Supermicro computer in that industry. And then up, McDonald's, we're going to talk about. We, of course, talked about them kind of rounding pennies here locally. That story's getting out. Fox 10 gave us that story. Well, now McDonald's 1.98% up today. Their third quarter earnings was $3.22 per share. That did miss the expectation level of $3.33 per share, so 11-cent miss for McDonald's. Then they had a $7.08 billion revenue. Well, that came in below that. That came in below that consensus of $7.1 billion as well. So McDonald's was actually down earlier today, as you can kind of see on your screen. They were down about 1% up to 1.95% up right now. So they've kind of reversed their track. The interesting things on the McDonald's talking points here with this announcement, the CEO actually said they expect their lower income people to spend less with McDonald's in this next couple months for the holidays, but also in the first early months of 2026. McDonald's is expecting low income, which is the majority of their customers, their low income customers, to spend even less with them moving forward. That's where we got those super value meals, the $5 menus. McDonald's is expecting that coming up. We'll have to see how they make the changes coming up, knowing that and expecting that and putting that out there with their announcement early or late yesterday, I should say, for McDonald's. Now let's talk a little bit about some local stories out there. And, SRP, well, they're going to convert their portion of the coal-powered Springerville generating station. Well, they're going to convert it to natural gas. It's a coal generating station right now. Back a few months ago, Tucson Electric Power said it would do the same thing on its own portion of the Springerville plant. So two big electric companies making that move here up there in Springerville away from coal. So it's the second coal to gas conversion that SRP has announced in recent months. Of course, the other one was that Coronado generating station that's up there by, I believe that's the one by St. John's up there in northeast Arizona area. So two big announcements there by SRP. SRP did say it considered other alternatives, things like building a new natural gas plant, but they concluded converting their existing units at Springerville was the most cost-effective option for them. No matter what they do, they're going to charge us for it out there. The conversion comes with a $60 million price tag for them to convert that over. That doesn't include the price of building a pipeline to supply natural gas to the station, which is still needed to do. SRP, as spokesman, came out and said the company is looking to double its generating capacity over the next 10 years. Yeah, and they're using natural gas, and they're expecting natural gas to play a large role in that process as well. Why? Well, because natural gas is a resource. It's available 24/7, right? Unlike solar, only available during daytime hours, which obviously helps, reliability in the energy sector if you can have it 24/7 as well. So that's why they're leaning toward natural gas as opposed to solar as well. And of course, everybody's moving away from coal. It's a dirty resource, hard to get, expensive at times to buy. So everybody's making these moves out there. So the SRP announced that. And then we get the fun one, right? APS is wanting this big price increase coming up. They just had one a couple years ago. SRP had a price hike just here on November 1st. Yeesh. Yes. Well, now we get some financial numbers from APS as well, right? Coming up here. If you remember, over the summer, APS had two peak energy, so did SRP, demand records, where they hit record numbers a couple days over the summer, a couple of those hot days. SRP, same thing. Well, that means more people are spending money on energy, they're producing more energy, and that combined and contributed to stronger third quarter earnings for the parent company of APS out there. That's Pinnacle West. So The earnings in the last 3 months, well, they officially outpaced the same time last year, even with those numbers. Now, who knows? It probably would have still outpaced last year with the growth that we're having here, even without those couple record days, right? But earnings overall for APS was 2.5% lower so far this year than the same time frame of 2024. That's what Pinnacle West is announcing here as well. They've reported higher revenue this year, but higher interest expenses partially contributed to the lower net income, is what they're attributing it to. These are people that make the electricity, folks, and they have a loss. That means it's on the backside of their P&L because they're charging us record numbers, a record number of dollar amounts as well. So if they lose money, it's because they're spending too much money. Pinnacle West continues to obviously expect large industrial users. Those are those data centers, TSMC up north there. They say they will make up 70-80% of retail electricity sales growth next year. Just those large people. And you as the customer, as a home, are going to pay the increase for those guys driving the energy increasement there, 70-80%. Yes. Obviously, Pinnacle West is saying that natural gas is going to play a major role in fulfilling the demand from those large users like TSMC. APS announced a new gas plant last week that they're going to build, and just like SRP and Tucson Electric, going that route. But higher revenues for APS, they just lost money because they spent too much of it, I guess. A little salty with the SRP price increase. I'm not going to lie to you guys out there, right? And then the governor, Katie Hobbs, came out. Remember when she kind of promoted and said a new prescription drug discount card would be coming the way for people that needed it? Well, it's now available to all Arizonans. It's called the Array RX program. It's not just for Arizona. Other states use it as well, but it's free to any Arizona resident. And it offers savings of about 18% on brand name prescriptions and up to as much as 80% off generic drugs out there. According to the governor's office with the statement that came out, this discount card covers FDA-approved prescriptions. That includes any mail order or any specialty drugs that you do use and need. Patients, well, you need a prescription still. You can sign up for the card online. All you need is an Arizona address to get this card as well. The card is meant for people without drug coverage. It can't be combined with any insurance policies. Arizona joins at least 4 other states already using the Array RX program. And so the governor made a promise. It's available for you out there. You just, if you search Array RX, ARRAY, it'll come right up for you. Fill it out. Get that information for your medicines. If you need that service, it's there for you now. And a big change coming to Phoenix Sky Harbor as well. They've been expanding. They've been getting record numbers, etc. Well, one airline has struggled there, and one airline struggled altogether in life. Spirit Airlines is who we're talking about. They announced yesterday that they're going to actually be leaving Phoenix Sky Harbor International Airport early in 2026. This is a statement that Spirit put out, and they said Phoenix was one of 4 airports in the U.S. that Spirit would stop flying into or even out of starting January 8th. The other airports are Milwaukee, Rochester, and St. Louis, effective January 8th. The other one that they're going to do is out of actually Columbia. That's going to end in January 13th next year, 2026. Obviously, Spirit struggled for a while, right? 3 months, they filed for bankruptcy 3 months ago for the second time in 2 years. They're having a cash problem. They're trying to get to the profitable flights only to get cash coming in. But interesting enough here, Airport Statistics, that company came out between January and September of 2025. Spirit has had 113,613 passengers at Sky Harbor. That sounds like a lot. But that's still a 64% decrease from the 314,540 passengers they saw between January and September of 2024. People are not flying Spirit anymore, folks. 64% decrease there at Sky Harbor. Spirit currently offers nonstop service to 8 cities across the U.S. from Phoenix Sky Harbor. That all goes away on January 8th coming up. 64% decrease. A lot of competition there at Phoenix Sky Harbor, right? That they are looking at that. And then we'll wrap up today talking about Carvana, local company, order your car through online and it just pops up at your house. Well, Phoenix here is becoming a test market for Carvana, but they're going to expand and even refine their same day delivery capabilities. So 40% of customers in Phoenix have access to same day or next day delivery here in Phoenix, in the Phoenix area. That's compared to 10% in other markets. After the markets closed October 29th, Carvana reported $5.6 billion in revenue for the third quarter. That's a 55% increase from the previous quarter. So big numbers there for Carvana, right? And now they want to get it. I imagine if you're buying a car online, you want it fairly quickly. And if you have to wait 2, 3, 4 days to get it, you probably start thinking about it, possibly could cancel the order, things to that effect. So for Carvana, it'll be especially important to deliver those cars quickly, right? Yes. Other things about Carvana with that reporting at the end of October, well, they exceeded a $20 billion annual revenue run rate for the first time. A lot of money for Carvana going out there. So if you want to order from Carvana, you're thinking about ordering from Carvana, expedited delivery is what they're trying to put together here in Phoenix. We're the test area. And like I said, 40% of customers here in the Phoenix area have access to same day or next day delivery of the cars. Yeah. Order your car, have it delivered. Order your car, 20 minutes later, it's delivered. I don't know if it's 20 minutes, but even if you get a car same day or even next morning when you order it and you don't have to go down to the dealership, argue with them and all that stuff, interesting thing to look at there. And if you're looking in that car market right now. And folks, I appreciate you joining me here for this Wednesday edition of McCollum on Business. We'll get this up on the YouTube page. We'll get this up at Robat TV on demand. Thank you for those of you that find it. This is my passion project right here. Well, we'll see you tomorrow, Thursday's edition of McCollum on Business. See what the market brings us then. Government shutdown updates, tariff updates. We won't have a Supreme Court finding it all. That takes a little bit for them to get those rulings out, but we'll see what the market's reacting to tomorrow as well. So come back and join me, would you? McCollum on Business.